Say for an example, maybe NDB Bank, the share is 110 rupees for an example. 110 rupees. So 100 rupees, for example, will you? Now I am the shareholder, I am the share investor. I think the NDB share is going to go up because we are expecting a bear market, right? So bull market. So I thought now NDB shares may going to go up by 150 very soon. Now what I am going to do? I am going to purchase more NDB shares, right? So I want to buy maybe around 1 million worth of shares of NDB. Say for an example, I want to buy 1 million worth of shares at the present price of 100 rupees, right? But unfortunately, I have only 500,000 rupees. I have only 500,000 rupees. But I want to buy 1 million worth of NDB shares. Now I am short of what? How much? I am shortage of 500,000 rupees money. So now, in that case, the stock brokering company can be act as a intermediary to give me a loan facility or the credit facility, right? To buy these stock, what I have intended to buy, say NDB, that stock for me, only for purchase of that's nothing else, only to buy stocks, right? And through I have to mortgage my initial investment with them. Clear? Now I have already have 500,000 shares now, but I want only buy another 500,000. So I am getting the loan, keeping my earlier for 500,000 worth of shares with NDB with that company, and I'm getting a loan for that. It's what you call margin trading facility. Now you understood what is margin trading facility, right? Somebody is giving me a loan to purchase stock. Okay, so that sort of a loan facility or credit facility, we call them as margin trading facility. So it is an intermediary thing, right? Intermediary function, because they give some money for me to buy the stock, only the stock. If you want to, organizations give me money to buy the stock, it's called margin trading facility. Right? I hope you have already written the things, right? Okay, clear? Understood? Right? I need put some feedback from you.
Yes, sir.
Okay, right. Now you see the question. Now this is your 2019 September question. Right? Now you know what is that. You know what is margin trading facility. Now this question came in your 2019 September. So read the question. What is the specialized product? What is the specialized product available with financial institutions for share trading activities? Institution for share trading activities at a stock exchange. So what's the answer? Answer is overdraft.
Margin.
Huh? Not overdraft facility. No, what's the
Margin.
answer? Huh?
B.
B. Margin trading facilities. Now you got the point, no? So that is why because the same thing I have taught my students in 2019 also. I'll give the same thing. I didn't have that question, but students in a position to answer what is margin trading facility. Now I think you understood clearly. Only thing you need to understand the concept, right? The margin trading facility, only loan given only to buy the shares in the market, right? That is why called share trading activity, right? Okay, so answer is margin trading facility. You know what you mean by a margin trading facility, right? Let me move into another financial instrument. So that is what you call corporate bond, or sometimes we call them as a debentures, right? Debentures. Now, debentures is, you aware, is a bond is a medium to long-term securities. Now, you know that another bond. Can you tell me another bond you learned other than the corporate bond or debenture? I think you learned another bond. How you call that bond? Huh? Remember? Can't remember. Huh?
Treasury bond.
Treasury bond. Treasury bond. Good. So, what is the difference between a corporate bond or the debenture and the treasury bond? Can anybody tell me what is the difference between now? Okay, I will first explain. Right now, these debentures, it's also medium to long term. Now, treasury bond, you noted that it sell it for 2 to 3 years. Now, debentures also can be go like that, but if the private sector financial institutions are issuing, banks are also issuing, issuing corporate bonds, it won't go for 30 years, right? It may go for 5 maximum of usually 5, 6, 7 years maximum, not for 30 years. Why corporate bonds? Why treasury bills, treasury bonds can be go for 30 years? Because it's a gilt-edged securities. Now, these debentures issued by maybe banks, right? Maybe private banks, maybe some companies, well-established companies, but still people are little reluctant to go for longer period. Why? We don't know whether these companies during 30 years be survival or not, right? So therefore, even though the debentures are issued by the private companies, some banks also issuing, right? Why we are not go for such a long period? Because we are not sure whether these companies are survive for such a long period. So therefore, when the private sector issued the debentures or corporate bonds, they may go for even though it's a longer term, but it's for a shorter period. And mind you, as we explained earlier, debentures also a capital market instrument. Why we call capital market instrument? It is more than the maturity period, the issue period is more than 1 year. That is why we call the debentures as a capital market instrument. Right? Okay. So usually the interest are paying, how? Pay interest at the usually semi-annual. That is what we won't say interest. We call them as what? How you call the interest for debentures and bonds? We will say coupon. Right? Usually, maybe sell it at a biannually interest rate or coupon rate. Right? So there are different type of debentures. I am not going to talk on all these things. You may learn all these things, I think, as I explained to you, like survey, subordinate debentures, redeemable debentures, and all sort of. There are different type of debentures, right? And remember, these debentures are most popular corporate debt instrument, right? Now the banks, if they want to, now debentures issued by the banks usually, so if the banks are facing the capital adequacy problem, I think you may learn about capital adequacy. Have you learned about the capital adequacy in your commercial banking or survey? Capital adequacy ratio? Have you learned about that? Not yet. Have you learned capital adequacy ratio? CAR? Not yet.
No.
No, not yet. Okay, you're going to learn, right?
No, sir.
No, right. You're going to learn about the capital adequacy ratio, because according to the central bank, every bank must have maintained a certain capital requirement, capital adequacy ratio, right? Okay, so you're going to learn all this. I don't want to put you telling all these things. Now, this capital adequacy, certain organization not enough having capital. There is a central bank as our regulator required all the banks to maintain certain level, certain standard of or certain level of capital, right? It is a central bank said, because to be survival in the market, be good at the market. So then what happened if the banks are not having enough capital? What they do to improve their capital, they issuing debentures, right? So therefore the banks are issuing debentures to the market to improve their capital adequacy. Just to remember that is enough, right? And remember, these debentures are issued by private organization. We have to, I mean, customers need to be trusted to all these things. Investors to buy this fund, investors may look at it, what is the credit rating of this debenture, who issuing this debenture, what is the interest rate or what is the coupon rate given. All factors the particular investor may look at it before they purchase the debentures. Right? Okay, now I ask you, now every time I try to compare, that is the question asked. If you look at the, if I ask from you, what is the difference between the debenture issued by a corporate entity or a company and the debenture or what you call the bond issued by the central bank? What is the difference between these two? Both are debt instrument. Both are capital market instrument, right? Both are long term, but there's a difference, right? But both are long term, more than 1 year. That is why you call capital, right? Both are issued interest based on the coupon rate, right? So what is the difference there? So important thing is
Bonds,
Treasury bond is a
bonds are
tradable instrument.
tradable, but certain, and I want to tell you, good, but there are some debentures also tradable, Puta, right? Not
and
all
these are issued
debentures.
by the private sector.
Yeah, okay. Okay, what you can't say private. Some banks are also issuing, no. So some government banks also can issue debentures. What the main difference between the private sector debenture and the central bank bond? One important thing.
Treasury bonds.
Those are gilt-edged securities, Buddha. Okay? Those are gilt-edged. That is guaranteed by the government. Right? Those are the important, right? So those are gilt-edged securities, right? Issued by the government. Right? The main important thing is that. Okay. So about the debentures, also issued by the private organization. Usually, in order to attract debentures, they may give little higher interest rate, right? Otherwise, people not go for debentures because higher the risk, higher the return. So you're going for a debenture for private sector, so you take little higher risk, right? So therefore, you're expecting a high return, right? Okay, you need to know a little bit of that also. Okay, so now we look at it, another one we call Sri Lanka Development Bond. Right now, Sri Lanka Development Bond, these bonds are issued in dollars, right? Sri Lanka Development Bond issues in dollars, and but we need in forms of US dollars. Now, recently, a central bank gave the direction for government organizations like Sri Lanka banks not to buy Sri Lanka Development Bond because they want foreigners to buy these bonds, right? So those are issued to the basically non-residents of Sri Lanka, and foreigners are eligible to purchase. Bonds are issued in dollars form, and CBSL guarantees the repayment, and it is a subsection of the capital market. And another bond like this we call Sri Lanka sovereign bond. Again, sovereign bond issues in the dollar form. But main objective of issuing a sovereign bond by the government of Sri Lanka, GOSL, to fulfill BOP expectations. What do you mean by BOP? If there is a balance gap between balance of payment, so in order to fulfill this gap, so people are going for improve the foreign reserve to solve the problem of fiscal policy, right? For that, the bond are typically used for Sri Lanka sovereign bond. Now, if the examiner asks from you, now these are again I'm going to tell you, those supposed to be asked at the survey or commercial banking, mostly survey, right? But if they doesn't matter, if the examiner asks from you, what is the bond? Well, I asked from you, right? I just generated the question from this. What is the bond issued by the government of Sri Lanka in order to improve the foreign reserve or to solve BOP issues. One, Sri Lanka Development Bond, Sri Lanka Sovereign Bond, Sri Lanka Treasury Bond. What's the answer?
Sri Lanka Sovereign Bond.
Sri Lanka Sovereign Bond. Good. Right? You understood, no? Right. So Sri Lanka Treasury Bond are using for development infrastructure activities. Right? Now sovereign bond we specifically usually issue for particular purpose. Right? Now you understood that part as well. Okay. Having understood that part, we are now moving to another financial instrument, that is what you call commercial papers. Now remember, the commercial paper not much popular in Sri Lanka. To my knowledge, what is the total market of commercial paper, the value of commercial papers issues to the Sri Lankan market may be around not more than 10 billion rupees, right? Not much. Right? Remember that commercial papers are not much popular in Sri Lanka, but it is an important instrument. Right? Now, investors can buy these commercial papers. Again, these are also debt instrument. Right? And also important things. Look at the feature, short term. The moment you say short term is less than 1 year, right? Is less than 1 year. The moment say 1 year, what is the type of instrument? We call them as what instrument? It's a money market instrument. The more than 1 year, we call them as what? Capital market instrument. So one specific feature of a commercial paper, short term, therefore is a money market instrument. Another important, non-collateralized. This is unsecured. Unsecured. Likewise, earlier, those commercial papers are issued by private sector companies if they need money for fulfill their short-term financial requirement. If they need some short-term capital, so what they do, they issue commercial papers, right? And sometimes banks also issue commercial papers, but majority of commercial papers are issued by some wealthy, credit-worthy, high-rated institution, companies, right? Okay. Sometimes they may have a bank guarantee also just to strengthen that product. They say, if I not pay you, so that particular bank is pay you, just to support your commercial paper. Otherwise, people won't buy it, right? I told you Sri Lanka sometimes not much popular in commercial papers, but remember it's a short term, right? And commercial paper usually sold at a discount, although some are interest bearing. Now, you know what is the difference between discount and interest bearing. Can you tell me another product sell at a discount? I think you know.
Treasury bills.
Treasury bills. Discount. Good. And it's commercial paper also issue a discount. That means commercial value you are issuing for, say for an example, for 6 months or 9 months or even for 1 year, for example. So the value of your certificate of commercial paper may be 100,000, for example, right? So how much you need to pay? Maybe they say 90,000, right? That is all that discount. Or like treasury bonds, they are maybe having the interest bearing after maturity. So it's a 1 year. It can be paid, usually paid by maturity, or maybe quarterly or bi-monthly. Or annual, semi-annual, or maybe at maturity, right? So both ways the commercial papers can be issued. So usually the time period for commercial papers, most of the commercial papers are issued for 9 months. So I think now you have an idea about what is commercial paper. Okay, clear? So I think you may come across these products, other institutions, other subject as well. Okay. So what are the advantages of commercial paper? So don't worry about these things. I have not put it. One advantage is, you can put it on if you want. Commercial paper, one advantage to fulfill the fulfill the, as far as the investors are concerned, so they can expect high return. One thing. From the investors' point of view, usually through the commercial papers, usually you are getting high returns, right? High returns mean high rates. But why? Because those are more risky products, right? There's no guarantee. Remember, one of the characteristics, unsecured. So if company collapse, you won't get any money. So you are going for high risk products, so therefore high return. So one of the benefits investors receive, right? Rate of return, right? So what are the disadvantages, as I told you, because of high risk, because it is not collateralized, therefore you are going to face a high risk. That's enough, right? Okay. Okay, now can you answer to this question? This is not my subject, right? Commercial banking paper. So what's the answer? That question is appeared on 2017. Can you tell me what's the answer?
Commercial.
C. Right. Now it's a treasury bond, 2 to 3 years. Shares is unlimited. Okay. Debenture, I told you, usually 2 to 5 years. Then what is the short-term financial instrument? Commercial paper. Now, because of me, you are answering other subjects question also, no? Is that true? Right? Okay, doesn't matter. So it can come from in my subject, say what is the instrument the investor is used for getting short-term financial benefits? Answer is commercial paper. Clear? Right. Right. Then on my subject, now say what's the answer? We'll go for some questions, right? Fast questions. With your present knowledge, I will ask some questions. Right? Don't worry. I think very easy. March 2017 question. Most secured product that could be recommended for a customer to invest his retirement funds. Now, okay, before answering to this question, I will tell you something. If a question comes in like this, what you need to look at it, you need to look at it two aspects. One aspect is what is the type of a product? What is the type of product? For that, you need to know the characteristics of that benefits of this product. Okay. Other factor, who is going to invest this? What type of customer is going to invest? Whether it's a risk-averse customer, risk-lover, like that. Got the points? If any questions like that, you need to look at two aspects. One factor is look at the characteristic of a product and look at the customer. What type of customer? Whether it's a risk-averse customer, you know what is meant by risk-averse, right? And risk-lover, right? And then try to match. Then you get the answer. Now here, these questions is tell you product and a customer. Now question is asking a customer is to be he going to invest for his retirement fund. Now retirement fund mean what? That is a lump sum amount he is getting after his retirement. In this case, we need to understand he is not going to get any more funds. Why? Because he is now retired. The entire money he is going to get after the job, after the retirement, is the retirement fund. Okay, because after that he's not going to work. We need to assume he's not going to work. This is the final money he's going to get. So this money, he has to invest in a proper place. Why? Because that's the only money he's going to get. His money is going to have. So this money he's going to invest where he expecting two things. One, at least some return. Other one, safety. That's why, because only money. I can't lose this money, right? So therefore, he may go for more secured product out of all these products, right? More secured product. I'm ensured that this money is going to come to me. Clear? With that background, what is the answer? With this background, what may be the answer?
Fixed deposits.
Right. Okay, we'll take one by one. Right. Okay, we'll take shares.
Treasury bills.
Huh? What do you think shares? Whether you don't know, no, you can invest, but shares are whether when the organization make a profit on you get the dividends, no? Otherwise, you have to wait. Right? Shares
So
is
I have a small doubt in the shares. If we invest on the shares, if the
Yeah.
company gone down the, even if you can see the corona situation, so
Yeah.
if we invest some funds in the particular share, will
Yeah.
we get the even capital if anything occurred like that?
No. You can share it. You can invest it. Right? You can do now in the share market, right? So you can sell it. But suppose your organization not doing well, now say you bought the shares for 10 rupees per share. Okay, clear? Understood? Right, you get a 10 rupees. Now your organization is not doing well, right? You cannot sell the same share for 10 rupees. Sometimes you can sell the shares at a discounted price. That means you have to sell them what? Sometimes 7 rupees. So you are losing the capital. You are not getting the capital gain. No, you are losing the capital. Why? You bought for 10 rupees. Now you are selling at 7 rupees. You can sell it. But even for 7 rupees, nobody is going to buy it sometimes. Okay, somebody is going to buy. So then what happened? So company is going to bankrupt. So now I told you, now I think you remember this. I explained to you sometimes, okay, sometimes you may not get anything, right? Why? Because you are paid the last. Once you paid all the other people, right? So as an owner, you are entitled to your share of the company's earning as well as anything right at these. But remember, so your money is getting, you are the last person. Why last person? So others are getting your preferred people who have in the preferred what you call the preferred shares, accumulated preferred stocks holders are the people first you get the money and finally you are getting. That is why I told you last to pay, right? So we don't know how much you are going to get. Not maybe 10 rupees, maybe less. Clear? Right. Now the important thing, the questions asked by one student. So you may lose. I mean, you don't want to get a risk, no? So sometimes the organization is doing well. You may go for so that shares, but you are going for a high risk. You may losing your entire hard-earned retirement fund going through the shares. So risk lover may go for that because of the situation, right? You won't get the capital even to that. So you are getting the capital once the organization wind up. So there is a procedure to be followed, liquidation procedure. So you are the last person to get your money. Right? So therefore, you don't want to go for shares. Okay, corporate debentures again. What do you think? So you're going for retirement fund for the corporate debenture? Yes, corporate debenture is a high risk. So therefore, you are getting high return. But what is the guarantee? These are issued by some private sector organization. The private sector organization collapsed. You lost your entire retirement fund. Okay, so therefore B and C is out. Clear? Understood? So I hope I answered to the question raised by one student about the shares. Okay, Puta.
Thank you, sir. Thank
Right.
you.
Okay.
Yes, sir.
Right. Now, corporate debenture also a risky thing, even though you get a high return. Right. Now, that is why we learn all these things, Puta. That is why we learn what is shares, what is corporate bond, what is treasury bill, what is fixed deposit, all. Right. Now, some students answer fixed deposits. Okay. Some say I heard that treasury bills. Out of all, Okay, take the fixed deposit now. Take the fixed deposit. Now, you don't know which bank, which finance company this fixed deposit issued, no? Now, suppose if you invested in you won't mention, no, they said fixed deposit. Now, fixed deposits are also can be issued by finance companies. Now, say for an example, there are instances like that. Now, most of the retirement funds you invested in, my goodness, yeah. So 1 million you invested in, with the investment, Swarna Mahal investment, ETI, what happened? That's also fixed deposit, no? Now that was collapsed. How much maximum you can get it? Out of 1 million, you can get only up to 600,000 under deposit insurance scheme, where we are going to discuss later on, right? So 600,000, you are losing how much? 400,000 rupees. So therefore, fixed deposits, we have not mentioned. If you say National Savings Bank fixed deposit, there is a possibility. Why? It is a government guarantee, right? But they say fixed deposit. Therefore, you cannot say it is a one. We don't know where, which bank, which institution. So, but we know one thing is sure. What is that? What is that? Treasury bills. That is the guarantee. That is the gilt-edged securities, right? So, in this type of question, what you expecting for you to know about the features, right? Okay, understood now? What the answer is? Answer is treasury bills. Okay, now a similar question, 2014 in our sum. What's the correct answer? Now you need to look at again, right? Right. What is this? What is now earlier question is appeared in March 2017. So this question is 2014. What may be the correct answer? Think and tell me. Right now, retired person mean his final money. Provident fund mean retirement benefit. Same, right? Okay. And they ask what is a prudent investment? What may be the correct answer? But here no treasury bills, right? What is the correct answer?
Treasury bonds.
Treasury bonds. Clear now? You understood, no? Right, good. That's enough. Then you have another investment, right? Okay. Now you have a similar different customers. Now this time they talk about who? Senior citizen. What may be the correct answer? Senior citizen. Again, old guy. What's the answer for this?
Treasury bonds.
Treasury bonds, correct. Now you see the type of customer, they talk about the senior retired person, fund, all are senior citizens. They are very much concerned about the final money. Right? So therefore they are going for a highly secured one. Clear? I think most of you are now got the answers, right? Okay, now see, learning about the products type of question, you noted, right? Now we are moving to discuss little bit of difficult. In fact, again, I want to tell you, I don't want to explain all these things, but I benefit of you all, I'll explain. So these are we call financial derivatives. The moment you say financial derivatives, Puta, I'll just give you a small thing. Derivative mean thawa ekak mata badila tiyen. Right? Derivative mean singaling kiyana mokadda vyutpanna vela. Vyutpanna. So that means these financial products or contract or financial instruments, sometimes we call, values are derived from the value of something else. Tawat ekak mata padanamma tamai me products hadala tiyen. Right? Eka product mataka tiyaga. You may have a lot of explanation under survey again, right? I'll just explain to you. Okay. Now, remember the important thing is these financial derivatives are highly risk instruments. Financial derivatives are usually risk instruments, right? Financial derivatives can be risky products. So, but these are used for risk management purposes, right? Hedging purposes, right? Covering some financial losses, right? Okay. There are three types of financial products like that. We call them as financial papers. We call them as three types of financial products. We usually call them as, okay, there is something over the counter and exchange. First we learn what do you mean by over the counter markets and exchanges. Now over the counter market means you can go to the bank counter and do the transaction, right? So that is what you call over the counter market. You can go to the bank and do the transaction we call over the counter market. But sometimes, so you may have to have a separate exchange places, separate place to do the business. That is what you call exchanges. Now, okay, I'll give you an example. Now you want to buy a shares. Can you go to the stock market and go and take the shares? You cannot, no? So there is a stock exchange. There is a specific people who work according to the rules and regulations. There's a standardized format of doing the business. That is we call exchange. Stocks you cannot buy over the counter. No? So it has to go through some process, some standardized methodology through exchanges, right? So remember, so the financial derivatives usually sell it over the counter as well as through exchange. Now that understanding, we discuss about the forward contract. Now what do you mean by a forward contract? Mean is a relatively simple derivative, right? It is an agreement to buy or sell an asset at a certain future time for a certain price. So forward contract is, remember, over the counter, right? Remember, over the counter. This is forward contract is very famous for foreign exchange. Forward for foreign exchange. Now say forward contract means, so you are basically going for to have a contract with bank. For example, you say, right? So you import certain items, for an example, right? You export some items, right? So money is coming to you, maybe, for an example, another 3 months time, example, right? So now the money what you're getting in dollar form, right? Now today dollar is 200 rupees, for example. Dollar is 200 rupees, right? So you think, so after 3 months, the dollar price today going to come down. So you go to the bank and say, I am going to receive around 200, say 100 worth of US dollars, right? I need to enter into a contract, forward contract with you. In 3 months time, what may be the dollar rate you're going to give, Sri Lanka rupee rate you're going to give me for that. So that is a sort of a forward contract. You can go to the bank and do the contract. Clear? Especially for importers and exporters are heavily involving in forward contract, right? Okay, now say certain importers. So you place an order right now, and once the goods comes only, I want to pay. So I don't know during that time. Now I have entered into a contract today, so 200 rupees. Maybe once the goods comes, I have to pay 210 rupees. So I have to pay more than what you are supposed to pay now. So therefore, I go to the bank and I contract with them. Okay, then they will decide the scenario, or they said, okay, I will buy for 205. Bank take the risk. Bank will analyze, right? 205. So then I go and enter into a contract. These are we call forward contracts, right? Okay. Now, you know, according to the Sri Lanka, the Central Bank of Sri Lanka, you need to know on 25th January this year, right? And sent a circular to the banks, commercial bank in Sri Lanka, right? Forward sales and purchases of foreign exchange by licensed commercial bank. Now you noted that according to the Banking Act 46.1. So don't worry. But only thing is the temporary, the central bank suspend forward contracts with customers for due to certain reasons, because they said in view of the need of avoid excess volatility in the foreign exchange. Now there's issues, right? So don't worry much on that. But remember, at least till such time for the 3 months from immediate effect from January, at least for February, March, April. So forward contract cannot be done by customers with the bank. That was prohibited. That you need to know, right? ඒකත් මතක තියාගන්න. මාස 3ක් යනකම් කිසිම forward contract එකක් ගහන්න බෑ commercial bank එක, because of we have some problem with capital, foreign currency. So therefore they said don't enter into a contract, right? Just for this. Now the future contract, remember, same as forward contract. But what is the difference? The difference is basically you cannot go to the counter, over the counter to the bank and do the enter into a contract. It has to go through the exchange process. So that's the difference. You cannot do over the counter. Future contracts, same as forward contract. The only difference, like forward contracts, futures contracts normally traded on a exchange, right? Through standard methodology. Right? That's enough for my subject as far as concerned. Then there's another important derivative called options. So now remember, options can be traded through over the counter as well as through the exchange. Now here we have a two type of option, that is call options and put option. Now what is option? Option mean මොකද option එක කියන්නේ? මොකක් හරි අවස්ථාවක් දෙනවා, වරයක් දෙනවා. Options, through the option I can move out from the agreement. That අනිත් ඒවල once you agreed you cannot come out. What the agreement එකක් ගැහුවොත් forward contract එකක්, right? You cannot come out from that contract. For that you need to pay high penalty for that. But options, special feature, if I feel it, I don't want this contract, මට මේකෙන් අයින් වෙන්න පුළුවන්. That is the one. For that you need to pay some money for that, but you have the option to move out from the contract. That is what you call options, right? So if you really talk about the options, we had options in I don't know if you can remember, you may be small at that time. We had the oil prices have gone up, right? Oil prices has gone up. So the Petroleum Corporation enter into options contract with Sri Lankan Bank of Ceylon People's Bank, and Standard Chartered Banks and HSBC, right? So we enter into the option Petroleum Corporation because the price is going up. So there's a big issue about the hedging, right? Issues about the options, because how can I explain? I don't want to confuse you, because options are, the contract is not properly done, right? But anyhow, we move out from the contract because of option we can come out, but we need to pay a lot of money to if you go out you have to pay. So government took a decision, I mean the court give the decision to out from, no need. But unfortunately when we go to the international commercial courts, the Sri Lankan government or the Petroleum Corporation has to pay a lot of compensation to those HSBC and Standard Chartered Bank, not obliging to the options contract. But Bank of Ceylon and People's Bank not charged because those are government institutions, but private banks have charged and earned a penalty for that, but not obliged to options, not properly obliged to option. Okay, just for understanding only, right? So only thing you need to know, forward contract is basically the over the counter, and the future contract you have to go to the exchange. But whereas the options are usually either for trade as well as over the counter as well as the exchange, right? Okay, I hope that level is more than enough. If you have any question, please ask, right? Okay, these are some of the option details. You just read it. Then we go for another financial instrument. Again, we call a structured finance. This is little complicated, but I will try to explain simply as possible. That's good for you. Structured finance we call asset-backed securities. Now, I think you may learn financial crisis. Have you learn about the financial crisis yet at the survey? No, I don't think so. You are going to learn financial crisis took place in the world. Have you learned? Okay.
The commercial bank we learn about.
Right. Okay, good. Commercial bank, you learn about the financial crisis. So one of the reason for 2007, 2008 financial crisis, there are many reasons, right? Subprime mortgages and all. Subprime mortgages mean the banks are giving loans to not good customers. That is called prime customers, subprime, right? Okay, so one of the reason is subprime. Another reason of financial crisis, remember the financial sector went into a product like this, structured finance, right? Okay, now structured finance, there are two types of structured finance. It's called the securitization process, right? Now, just try to understand this asset-backed securities, very risky product, right? Now, structured finance mean basically now you are trying to sell the securities. You are trying to sell the receivable also to another customer. Now, let's look at it. I just briefly explained the what you call right? What you mean by asset-backed securities or structured finance, right? There are parties. One party is we call originator, right? Another party we call SPV, special purpose vehicle, SPV. Third one is called service provider, and the fourth party we call investor, and the fifth one we call a credit rating company, credit rating institution like Fitch Rating, S&P, Standard Poor and all. Now there are 5 parties are usually involving for asset-backed securities. Now I'm trying to explain you very simply, please try to understand. Now usually the originator is usually a bank or lender, right? Now say this is the originator. Usually a bank is a bank or a lender, people who give money, loans, right? Now banks, now suppose your bank has given different type of loans, maybe housing loan, right, owning, commercial loan, pledge loan, what you have a different type of loan which we are going to discuss. So collectively these loans are we call as what? Portfolio. Sometimes we call them as combined loans, combined portfolio, right? That means, so you in your bank is having 2 different type of loans, maybe pawning, maybe term loans, maybe overdraft, or whatever you call it, we call combined portfolio. When I'm a bank worker, I go back to right. Now what happened? You are going to sell these to your entire combined portfolio, right? For SPV. That means What you mean by the SPV is the you call them as specific purpose, special purpose vehicle. Special purpose vehicle in your handout, right? That is SPV. Another organization, what's called special purpose vehicle. Okay. Right? You are going to sell your entire portfolio, say value of, say for an example, 200 billion, for example. So you try to sell entire portfolio to SP. So what you are getting? You are getting money for that amount of 200 billion. You sell and you get the money. Clear? Right. Now what happened now? But this was given to different customers now. Right? Customer A, B, C, D, E. So this portfolio is combinations of the loan given to A, B, C, say for example, D. Right? E. Right. Now these are different type of loans are given by the bank to different customers. That is a total amount. That amount is come to 200 billion. Now originator, right? This portfolio selling to SPV, special purpose vehicle. What this SP is doing now? P is segregated the entire portfolio and have a separate credit products. Right? Say these are we call asset-backed securities. Asset-backed securities. ABS. ABS. Say maybe this about 200, maybe this is 20 billion, maybe 10 billion, like 50 billion, like 60 billion, like that. They work it out. They categorize their portfolio and put into different type of loan products. Now, once you select the total value of their loan portfolio or combined portfolio to the SPE, they have some money now. 200, no? Right. Now what happened? This fellow sent that 200 million to give loans to X, Y, Z like that. L like that. Different set of customers. Then we suddenly humble at them, right? Still you are not receiving the money from them. But you're selling receivable. Receivable. Hambinne dina salli tamai me vikunnan. The megollo me agreement එක ගන්නවා පොඩ සල්ලි ගෙවනවා. හැබැයි මෙයා මේ හම්බෙන ඔක්කොම හම්බෙයි කියලා හිතාගෙන ඒක තමයි මෙයාට විකුණන්නේ. Right? Okay. Now what he's trying to do, and that money also he giving to another set of people. The receivable are selling to another guy. High risk, no? Right? Okay. Then on the SPV. Now what his company is doing, they are breaking down the entire portfolio. Then api itannago, then on the pol ganno kili itannago. On the pol ganno, pol mudalal, on the mudarne. Pol mudalali pol ganno, pol van pol gan. May on the pol van car. SP car තමයි ඔන්න බුළු වෑන් එකම මං ගත්තා. ඊට පස්සේ මම මොකද කරන්නේ? පොල් වෙන් කරනවා. පොඩි size, ලොකු size, එක එක size වලට වෙන් කරනවා. Right? That is ABS. දැන් මෙයා මේ ඔක්කොම ගත්ත එක දාන්නට. හැබැයි මෙයා පොල් size අනුව වෙනස් කරනවා. දැන් මිල වෙනස්. Understood? Right? ලොකු පොල් වලට 110යි, පොඩි පොල් 100යි වගේ වෙන් කරනවා. Right? And for that, what he said, he is getting, we asked the credit rating agency, right, to get a rating for these instruments, to get the people. Now, once your credit rating agency give some rating, so value of these financial products get more weightages. So what is credit rating agencies now doing? They give, and these are purchased from whom? These are purchased by investors, right? For that, you get a little higher return. Purchase from ABC and they give the returns, right? Clear? Now, SPE entrusts the originator to the මෙයාට මේ සල්ලි මේක මෙයාට ගෙවන්න නම් මෙයාට හම්බෙන්න ඕනි මේගොල්ලෝ හම්බෙන interest, right? So the installment and the capital, he has to pay for SPV. He has to pay for SPV, capital and interest, whatever, SPV. එයාට හම්බෙන ඒවා තමයි මෙයා investors ට ගෙවන්නේ, right? Now collect from the money from ABCD, again doing by the service provider. Usually service provider tamai originator. We banku tamai ye වැඩේ කරන්නේ. For that, separate fee is given to the originator by the SPA. Then මේ හම්බෙන සල්ලි ටික මෙයා SPA එකට දෙන්න ඕනේ. SPA තමයි මේ investors සල්ලි ගෙවන්නේ. Then හිතන හදිසියෙන්වත් මේගොල්ලෝ සල්ලි ගෙව්වේ නැත්තම් ගත්ත loan may occur system become upset. That is what you call securitization, right? So it's a very complicated product. That is high secure, high risk. Huh? So that is what you call structured finance. One of the reasons, now this instrument is one time very popular in USA, UK, especially USA. Securitization. Sri Lanka not much popular, remember. So if these customers bankrupt, now problem is the entire system get blocked. That is one of the reasons why financial market collapsed, because of introductions of products like this, structured product like this. One of the reasons for financial failure in 2008. Right. Have you understood? I know it's very complicated. තේරුණාද? නැත්තම් මම ආයි එකපාරක් කියන්න. ඔයගොල්ලෝ සද්ද නැහැ. සද්ද නැහැ කියන තේරුම් නැහැ කියන එකද? Can I explain to you again? I need a feedback from you. Understood or not? Tika.
Can you explain?
Huh?
Can you explain again?
Okay, right. Okay, I know you not having much exposure. No, I don't want to tell these things, but I will try to explain, right? Okay. Now, first have you understood this entire structured finance project involving in different types of business people? I mean, the certain group. One is originator. Technical, right? Technical aspect. Originator. On about asset-backed securities are bond, collateralized, secured by mortgages, loans, and other receivables. Typically, the issuing institution sells mortgages, right? Okay, now again, right? There are four parties. Who are the parties? Originator. Originator කියන්නේ කවුද? සාමාන්‍ය lender කෙනෙක්. එහෙම නැත්නම් සාමාන්‍ය බැංකුවක්. එයා තමයි මේක initiate කරන්නේ. Originator. SP කියලා කියන්නේ special purpose vehicle. මේගොල්ලෝ separate organization එක. Right? Okay. Then service provider දැනට කොහොමද තියාගන්න? සේවාව සපයන මේ වැඩේට උදව් කරන සේවාව සපයන ආයතනය. Investor තමයි කවුද? මේ products, මේ structured product, එහෙම නැත්නම් asset backed securities purchase කරන investors ලා. අපි වගේ investor කෙනෙක්. මතකද යන්නේ? මේ investors ලා මේවා ගත්තම high return. Okay. දැන් හරිද parties ටික? Right. Then it was credit rating agent company because ඒගොල්ලෝ මේ products වලට credit rating එකක් දෙනවා ඒක බලලා. දැන් මොකද්ද මේ originator? බැංකුව කරන්නේ මොකද්ද? බැංකුව අපි දන්නවා බැංකුවක usually you have a portfolio. Every bank must have given loans to different sectors. They have given term loans, pledge loans, overdraft, personal loan, commercial loan, housing loan, right? So they have a full of type of loan. Then we combine loan value එක තියෙනවනේ. මේ combine loan ටික ඔක්කොම එකතු කරලා මේ loans ටික තාම දැන් මේවා ගෙවාගෙන එනවා customers ලා. හරිද? මේ බැංකුව ABCD ආදී වශයෙන් customers ලට දීපු loans වල එකතු different type of loan මේ loan වල එකතු ඔක්කොම ඒක actual value එක තියෙනවනේ කොච්චරක් loan value එකක් තියෙනවනේ ඒ loan value එක සම්පූර්ණයෙන්ම විකුණනවා මං කිව්වේ මේ SP special purpose vehicle එක ඊළඟ යා සල්ලි ගන්නවා බැංකුව හරිද තාම හැබැයි ඔරිජිනේටර්ට මේ සල්ලි හම්බෙලා නැහැ පොඩ හම්බෙනවා මාස් පතා හම්බෙනවා සල්ලි හැබැයි SPV එක මොකද කරන්නේ යාට මේ සල්ලි දෙනවා අපි දෝ වටිනාකම බිලියන 200ක් නම් සමහර 200ම දෙන්නේ නැහැ සමහර 100ක් විතර දෙනවා right ඒ වටිනාකම දුන්නම බැංකුව මොකද කරන්නේ ඒ සල්ලි ආපහු වෙන සෙග්මන්ට් එකට ණයට දෙනවා අර LX L4 ආදී වෙන කස්ටමර්ස්ලා ටික ඇයි බැංකුවේ දැන් සල්ලි තියෙනවනේ ඉස්සර සල්ලි තිබුණේ නැහැ. ඇයි දැන් SP එකකින් සල්ලි දුන්නානේ ඒක වික්ක එහෙනම් දැන් මේ වික්කේ මොකද්ද? රිසීවබල් හම්බෙනේව තමයි විකුණලා තමයි තවත් අයට දුන්නේ. ඕකේ? SPV මොකද කරන්නේ? SP කාර්යය පොල් වෙලෙන්දා වගේ මූ මොකද කරන්නේ? අර බැංකුවෙන් හම්බුන ටික මුළු පොල් ඔරියම දැන් එක එක ගොඩවල් ගහලා එක එක ප්‍රොඩක්ට්ස් වලට වෙන් කරනවා. ලොකු පොල් පොඩි පොල් වෙන වෙන ප්‍රයිස් වලට එතකොට සහතිකයක් ගන්නවා ක්‍රෙඩිට් ඒජන්සිගෙන් ලොකු පොල් හොඳ ක්වොලිටි පොල් හොඳට තියෙනවා ආදි වශයෙන් they'll give them because why the investors are look at the credit worthiness right which product they are going to invest higher the risk higher the return එතකොට credit rating එක අඩු වලට high return ඉල්ලනවා ඊට පස්සේ SPV මොකද කරන්නේ එයාට මේව විකුණලා එයාගෙන් සල්ලි අරගෙන එයාට ඉන්ට්‍රස්ට් එක දෙනවා. දැන් තේරෙන්නේ ස්පීඩ් ඉන්කම් එක මොකද්ද? ස්පීඩ් ඉන්කම් එක මේගොල්ලෝ ඉන්වෙස්ට් කරන මේ සල්ලි මේකේ. right? දැන් බලන්න එකම බහන්නේ තමයි විකුණලා තියෙන්නේ ඉන්වෙස්ට්. එක දුවම තමයි විකුණලා තියෙන්නේ. එක ගේම තමයි දුවලා ඔක්කොටම දීලා තියෙන්නේ. right? ඊට පස්සේ මොකද කරන්නේ දැන්? අර ඔරිජිනේටර් දීපු සල්ලි එකතු කරගන්න එපානේ. ඒක තමයි ඇග්‍රීමන්ට් එක. ස්පීඩ් එකට දෙන්න ඕනේ එකතු කරන සල්ලි. ඒ ප්‍රොමිස් එකෙන් තමයි දෙන්නේ. එතකොට originator නැත්නම් බැංකුව service provider කරනවා. Why they provide the service provider? ඒ මොකද දැන් එකතු කරන එක පසු විපුරම් කිරීම all are done by the service provider. ඒ සඳහා SP වෙනම සල්ලි ටිකක් දෙනවා service එක එයාට දෙනවා fee එකක් දෙනවා ඒ වැඩේ කරනවා. එතකොට ABCD ගෙන් ගන්න සල්ලි ටික එකතු කරන්නේ කවුද? SPV. ඒ සල්ලි අරගෙන SPV මොකද කරන්නේ? ඒ සල්ලි අරගෙන ඒ ඉන්වෙස්ටර්ට අර ඒ ෆී එක දෙනවා නැත්නම් ඒ කූපන් රේට් එක එහෙම නැත්නම් එයා ඇග්‍රී වුණ රිටර්න් එක දෙනවා මෙයා මේකෙන් ගන්න සල්ලි. ඉතින් මේ අතරමැද ලාභයම තියෙනවා right. ඉතින් මේක තමයි ක්‍රමවේදය. දැන් හම්බුණා. දැන් ක්ලියර්ද? දැන් චුට්ටක් තේරුණාද?
Yes, yes.
Right. Okay. Right. I think now you can understand now where it is no why if ABC has not paid entire this get block right උට සල්ලි හම්බෙන්නේ නැහැ නේ clear what they don't know it is a highly risk product so but it was one time in USA is very famous instrument that is the one of the reason why the financial crisis උගන්වනකොට කියලා දුන්නේ නැද්ද හරි කමක් නැහැ right you are supposed to teach all these things right the structured finance is one of the reason why the financial crisis took place right okay these we call asset backed securities simply we call them as securitization Sri Lanka is not much powerful because we don't have a market for such right ekinda thamai meke echara Lankawe popular unne I think I have spent more time for this right okay now we move into next another financial instrument we call unit trust. Now you know what is unit trust. Unit trust is a collective investment. A large number of investors, a small number of people. I can salli kuda invest karanna bari na. So what is the value of a unit? Rupiah 10. So you and me can go to the unit trust company and invest my money, right? And the unit trust mean so you combine a large fund podi ekkenage salli unit trust ekatu karala is a collective investment Unit trust is a collective invest. A large number of investors pool their money together to create a much larger investment fund. Clear? That's understood, no? Right. Then what happened? This unit trust company, they invest that big money in different investment instruments and collect some investments, collect some profits, and collect some dividends, and that money what they have collected given to the investors based on their investment amount, right? So that is what you call unit trust, right? Unit trust. Sri Lanka market, Sri Lankan the central bank as well as the Ministry of Finance want to popularizing unit trust in Sri Lanka, right? Okay, so then what happened? They enter into a trust deed. Now, there are three parties involved. Who the parties are involved? Now, unit holder or investor, the person who go and buy unit trust from. Unit trust we call like a share, we call unit trust. Rupiah 10 CAD, right? ඔන්න මම මිලියන් එකක් අපි තුමු ලක්ෂ මට එච්චර සල්ලි නැහැනේ. පිටු රුපියල් ලක්ෂයක් දානවා මම ගිහිල්ලා ඉන්වෙස්ට් කරනවා unit trust company. Right? Unit trust company ගියාම unit trust company ඒක handle කරන company ට අපි කියනවා fund management company. One of the company. Now the fund management company collect all the funds from investors, small, and create a big fund. And this big fund, they invested money in high yield instrument. They do it because they have some sort of a knowledge, some sort of a professionalism on that. So they are one party. Whose money? My money. I am the investor. Or another party. Now somebody has to be there. කවුද මේක හරියට කරනවද? මේ මගින් ගත්ත සල්ලි මේ ඉන්වෙස්ට් ෆන්ඩ් මැනේජ්මන්ට් කම්පැනි හරියට භාවිතා කරනවද? හරියට ඉන්වෙස්ට් කරනවද? මේ කියන එක සොයා බලන්න is an independent body is called trustee. It is a tri-party agreement. And the deed is given to you is called trustee. Right? මේක තමයි මගේ සාධකය. Right? Make a hariyata balla tungin three parties: trustee, fund management company, and unit holders, investors. Right? So what are the advantages of unit trust to investor? That is what I am worried now. Now you understood, no? So the unit trust means a small type of investment. If the small investors can invest their money in organizations in the what you call unit trust company. So there are around 14 UT management companies like Namal, right? Namal investment company. Like there are in Sri Lanka there are 40 unit trust companies. Some people are investing in unit trust. If you can't invest in big money, what is the value of 10 rupees? So I think on the ඒගොල්ලෝ මොකද කරන්නේ මේක ෆූල් එකක් හදලා ඒ ෆූල් එකේ සල්ලි ඉන්වෙස්ට් කරනවා. එක්තරා විදිහට මේ වගේ වැඩක් හැබැයි ඒක වෙනයි යා. ඒක කෙලින්ම ගන්න කස්ටමර්ගේ සල්ලි. right. ඊට පස්සේ මොකද කරන්නේ? ඒකෙන් ඉන්වෙස්ට් වලින් හම්බෙන ඉන්කම් එක අර ඩිවිඩන්ඩ්ස් එකක් වශයෙන් බෙදලා දෙනවා කාටද? කාටද බෙදලා දෙන්නේ? අර ඉන්වෙස්ටර්ස්ලාට. එතකොට what is the advantage of unit trust to investor? ඒකනේ බලන්න ඕනේ. One advantage is it is not there, no? And පොඩ්ඩක් දාගන්න. Sorry. ඒක දාලා නැහැ ඔයගොල්ලෝගේ handout එකේ. One advantage, you can say advantages, right? So risk is reduced due to diversified investment. So why? Because you are given to investment fund management company. Now, these fund management companies having a specific knowledge about which organization to which instrument to invest. They have a specific knowledge, but you and me as an investor not having that, right? So therefore, what they do, they invest money in a different investment. So therefore, you are diversifying your investment. Who diversify? Fund management company. The moment you diversify the investment, So you are less risk. So not like invest money in entire money in the risk in the particular share market, right? So through unit trust, you are diversify your investment, and also you can get capital gains or dividends. Both, what is the income you are getting? Dividends, like share, right? Capital gains mean your 10 rupee can sometimes you can sell it at a 10 rupee, 24 rupees, like that. That's a capital gain. So the in the unit trust also you are getting dividends at capital gains, right? But sometimes last year budget, the central bank, so the government tax exempted kara. Make a due karanda, may market take a unit trust market take a very karanda, tax exempt kala. The income generated through from the dividends was announced as a tax free, just to promote promote unit trust, right? Then could enlist the services of professional managers, possibility of getting tax concession, right? And this is very good for small scale investors. These are some of the advantages of unit trust, right? Small investors can use to invest their money. Risk is diversified. There may be a tax concession, and fund management, he is using the fund. Therefore, they have expertise, professional knowledge to get a higher return, where you and me cannot, right? So those are we call unit trust. Then there's another investment we call venture capital. Understood about the unit trust, Puta?
Yes, yes.
Right. Okay. Now I think those things again you're going to learn both. Tama kale nadda survey? No, not yet. Kale nadda?
Sir,
Survey ke kalada? They have done in the survey. No? Kalada? Kiyanne ena karande ඇති නේද? Right. For commercial banking kalada? ඒත් නැද්ද? Right. Okay. Doesn't matter. Huh? Kalada? Unit trust kalada? Karanda ඇතිනේ. කරන්න ඕන හරි කමක් නැහැ. So I explain to you, no, right? Please listen to them also. You get some different angle on that. Okay, we'll look at the venture capital. Now, venture capital means funds. Again, the small fund available for startup firms. Suppose if you want to start some business for small businesses. Now, sometimes you may have a wonderful idea, wonderful business idea, right? Now, all at program TV. So they call investors, ask your business opinion. If the interview panel was satisfied your business proposal, they give some money to start the business. At Paura Kila program ITN they program. It's a venture capital program. Right? There's a program. What happened there? So there are 3 investors are there, right? So people was asked to come up with their business proposal. Wagi business matone apitu matamutu ideta bokakari kukul farm ekakari ekakatara mata ekata kiyak yanawada matone 2 lakhs. එතකොට අර පැනල් එක අහනවා ප්‍රශ්න. How can you improve this? It's 2 lakhs is enough. What is your plan? What is your plan to market the eggs? Like that, they will ask question. If the entrepreneur or the people who in a position to convince the panel, so they said, okay, I'll give you 200,000. You start the business like that. So like it's a venture capital sort of a thing, right? Venture capitals means fund made available for people to start their businesses, right? Okay, that is what called seed financing means, to start the business. Seed can a pala bija, finance can a bija, mulya bija. Suddenly they now start karan. The guys who's having some good ideas where they don't have the money, so money is given in form of venture capital. So venture capital, therefore financial intermediary. You can consider venture capital as financial intermediaries, right? Act as an intermediary to mobilize and transfer capital funds to processors of needy people. Right? Therefore, venture capital can be considered as a financial institution who act as an intermediary. Right? So usually venture capital is money provided by the professionals who are alongside with the management for young people, those venture capitalists, they are mainly raise the capital from wealthy investments. So that's good for you to develop some new businesses. The money is given, we call them as capital, venture capital. So in return, they're expecting some money, right? They're expecting some money once the companies develop. They will support you to build up your businesses. Okay, that is venture capital. Now, why we need to learn about the venture capital? So please look at it. What is this? Is non-bank financial institution paper. Venture capital is mainly raised from, what's the answer? I have given you, right? From where the money giving? From, now read this one. Venture capital is mainly raised money from wealthy investors. So what is the answer? Venture capital is mainly raised from wealthy investors. Right? Clear? Right. Now you look at my question. That is my questions being financial science management. They also ask the question. I need a good answer for this. This is 2019 question paper. Right? Which of the following is a financial intermediary who helps to mobilize and transfer capital fund from those who possess it to be who need it? What's the answer? Leasing finance, venture capital, merchant banker, higher purchase.
Venture capital.
Venture capital, right?
Venture capital?
Now, answer is venture capital. Now we got the point, no? Now the venture capital means act as an intermediary. The people who need to start their businesses, right? They need some capital. Now for small people to start their business, we call seed financing. Startup capital, seed financing. Startup capital who have a good business idea. They don't have money to start the business. For such situation, there are some institutions who come forward and invest their money for those people. Now, those are investors invest their money for people who need that sort of support, expecting return in the future. Suppose that venture is successful, so they are benefited, no? So therefore, such sort of capital formation or investing the money we call venture capital. Hari? Okay, venture capital. Right. Now we move into another business. We call life insurance policies. How many of you are having the life insurance policy? Personal, the bank, are you having the life insurance policy? Huh? Most of you are not having, no? Right, okay. What is life insurance policy? Now, it is a contract again. Now, life insurance policy is a contract between policy holder and the insurer. Like me, like you, with the, say, Sri Lanka Insurance Corporation. So, he's the insurer, you are the insurance policy holder. Right? Why? Where the insurer promised to pay, Sri Lanka Insurance promised to pay a designated sum of money. Designated sum of money means agreed money in exchange for a premium. Where premium, what do you mean by premium? Premium is the money you are paying regularly to the insurer. If you pay a regular payment to the insurer, I will guarantee you some designated amount, maybe 1 lakh, 2 lakh. If something happened to your life or death of a policy holder or permanently disabled or critically ill. Right? Death, permanently disabled or critical ill. So you have to prove this is a critical ill. They have the things. That is what you call life insurance policy, right? This money is intended to help the customer meet her financial needs or those his dependence of these events happen. Now, the money is getting from the insurance policy. The policy holder can be used for his financial needs or maybe for dependence after this happened, right? That is what you call life insurance policy. So policy holder getting some designated sum of money upon the death or permanently disabled or critically ill, but providing the insurer need to pay, the insurance policy holder need to pay a certain premium, right, to the insurer. That premium may be depend on the type of job you work doing and the amount you insure. Okay, so that is life insurance policy. Actually, it is a life insurance provider financial protections or coverage against these risks. Now, why banks are worried about this? Now, when you go for housing loan or certain loans, sometimes banks will ask for you to get an insurance cover for life. And then banks is asked to assign that insurance policy to you. Right? And also another insurance important thing is insurance policies can be nominated. Can be nominated. Therefore, insurance policy will nominate it to the bank. Suppose you are a borrower, if something happened to you, since you have taken the policy insurance cover, which was assigned to you, so bank now go to the insurance company and show the policy and ask the money. So then the bank covered the loan taken by your policy, taken by your customer. So bank recover the money from the financial institute, from the insurer, behalf of the customer, right? So sometimes the banks recall life insurance policy going to take when you're granting a loan, right? Okay, so that's a bank because, and then bank was asked to assign the policy to bank, right? So what happened? Therefore, life insurance provides financial protection, coverage about these risks. In return,
So,
yeah, go ahead.
bank insurance is
Something similar to that. Something similar to that, right? Now, in that case, bank assurance means bank provide that services. That is called bank assurance. Rather, with the banking instrument, bank also provides that. But remember, banks are not going for a life insurance. They're a separate company because you need to fulfill certain requirement being an insurance, right? Bank also can do that, right? Only thing is, bank insurance means bank also involving insurance business. That's the bank insurance. ඒගොල්ලෝ ඒ වැඩේ කරනවා බැංකු ගොඩක් වලට අවතන. දැන් හරිද? ඒක තමයි bank insurance කරන්නේ. Okay, it can be life insurance, right? It can be any other insurance, but banks provide that facility also. We call bank insurance. තේරුණාද? හරිද ඔයාලට?
Yes.
මේක insurance company එකක් කරන්නේ separate entity. ඒක බැංකුව කරාම ඒ bank insurance එක. Clear? Right? හරිද? තේරුණාද නැද්ද?
Yeah.
Right. Okay. Right. Then, so life insurance policies. Okay, in return for this protection coverage, the customer needs to pay premium for an agreed period of time, depend on the type of policy, right? Continuously, you can pay. The premium can be paid monthly. Premium can be paid semi-annually, quarterly, or yearly. So, for an agreed period of time, that amount will decide by the insurer, depend on the profit and the other factors, right? Okay, the life insurance policies also are marketed to meet retirement planning, investment purposes or obtaining loans. Various purposes, these life insurance policies therefore can be used. And therefore, sometimes the banks can be used these life insurance policies as collateral as a security. That they run it, we can make use of. That is why we are learning insurance policies, because it can be assigned to a bank. So so I'll take insurance cover. I can assign to the bank and I can take a loan, especially for products like housing loan and things like that. Okay, right. Now, question. My famous one, look at it. Banks and financial institutions design and market financial services product, catering to the different product. Now asking you, what are the risks to the life insurance policy? Again, can you remember them forward? Characteristics, benefits to the customer, benefits to the bank, risk to the bank, risk to the customer. I leave it for you, right? Okay, just put down life insurance policy. Try to answer this question, right? We will discuss in next Sunday on this, right? What is the format? First, characteristics. Under that, what you need to write, right? Life insurance policy is a contract between an insurance policy holder and insurer, where the insurer promised to pay a certain sum of money. Make it characteristics or feature. Then, what are the benefits to the customer? What are the benefits to the customer? Right? They can use as a collateral. Right? If something happened to the beneficiary, right? So he can take some money, right? And some benefits. So this is an advantage. What is the risk to the customer? Example, I'll just tell you, right? Try to write. So we will discuss answering. What is the risk to the customer? Suppose you have failed to pay any premium as you agreed. What happened? The policy become lapse. So then your agreement become null and void. My goodness. Right? What is the risk to the institution? To the insurance company. Then make insurance move right? So those are some of the risks faced by the so try to answer to that question. So we will discuss the answer later on, right? Okay. Then we are moving to discuss about annuities, right? So we try to finish this one anyhow, right? We discuss annuities. What do you mean by annuity? Right? Annuity is a contractual financial product sold by a financial institution with the customers. Right? What does annuity mean? Now you say there's a lot of products about the annuity. Right? Can anybody tell me any brand name sell by your bank, annuity bank? Can tell Dumali, Diniti, can tell Nestle. I just randomly check at Keran. So tell me any annuity product you are marketed, your bank is marketed. Can anybody tell me? Any Mr. Mohammed Alpha, any financial product your bank is marketed comes under the name of annuity. Annuity is now you pay either lump sum, right, or maybe installment wise a fixed sum of money, and after you pay or once you completed your payment, till such time you die, the bank will pay you some agreed amount. Say for an example, so now say I am 50 years old, for an example. Now I purchase or I enter into a contract with the bank, and Bank of Ceylon it's like some sort of a pension product. Now government want to popularize this product because to people who are not having the pension schemes, right? We call annuities. Now say for an example, Flexi, not Sexy, Flexi plan, People's Bank, then
Bonus accounts.
bonus. I can't remember. Okay, so what is now is the product work like this? Now say lump sum.
Senior citizen Netflix.
Not senior citizen Puta. It's like this, right? Or remember this. Now, what is Bank of Ceylon product? තාත්තටත් දැන් 100ටක් තියෙනවනේ කියලා කියන්නේ පෙන්ෂන් එක. අපි ශ්‍රී අභිමානීද සිරි අභිමානීද මොකක්ද කියලා. එතකොට future commercial bank you have a product called future plus or something, right? So all banks are having annuity product. HNB earlier you had a silver line. මතකද දැන් නෑ ඔයගොල්ලෝ. Right? It's like this. Now you say you are around 50 years old. Bank have the system, develop the. So as a 50-year-old person, you put say 1 million lump sum, right? From 55 onwards, bank will give you say depend on the interest rate and all 2,500 every month till you die. Our product, no? Why? In 50,000, in 50 years old, I have to pay 1 million. Example, I just give you rough figures, right? So bank will work accordingly, right? I have 1 million. I deposit the 1 million with say HNB, right? From 55 years onwards, out to 5 passe, 55 passe, mata banku denawa hamma masakam rupiyal 10 gani till I die. These products we call annuities. So if I don't have a 1 million at once, I can pay installment up to 55. Right? Same thing. Then I may get less than 1,000 rupees, maybe 850 rupees till I die. These products are we call annuity products. Sometimes we call pension products. So only thing is you have to pay agreed amount in installment, or you can pay lump sum, and after you reach around 50 or 55 or 60, depend on the agreement, the bank will pay you. You won't get the money back, huh? So bank will pay some money installment, right? So they calculate the prevailing interest rates, a fixed sum of money paid to someone each year, typically for the rest of the life, and that sort of a products we call annuity. Annuity is a contractual financial product sold by financial institution, draw a fund from an individual. Upon annuitization, pay out a stream of payment to the individual at a later point of time. Right? I think you understood the concept. So this provides a savings plan for individual to benefit by way of superannuations, right? For it is called the investment plan for senior citizen. Somebody talk about the senior citizen. I think you are referring to investment plan for senior citizen. Invest a lump sum or invest over a period of time, then start receiving payments immediately or at some later date. Select a fixed variable or index rate of return. Right? ඔයාට තියෙන්නේ දැන් හිතන්න මට ඕනනම් භාගව තියෙන රුපියල් ලක්ෂයක්. හිතමු example. I have 100,000 rupees. So say 1 million. Now I am 50 years old. මට ඕනේ 55 පස්සේ මට රුපියල් 10 ගානේ බැංකුව ගෙවන්න. මම ගිහලා බැංකුවේ අහනවා I need 1 million 100,000 rupees every month. How much I have to put down? And banks have all workout schedules, right? Okay, what is then they will ask, how old are you? They say I am 50 years old. Okay, so when I want, I need the 1,000 rupees in from 55 years. Then they work it out accordingly. They have annuity tables, all are stuff available in the computer today. Then they work out, okay, so in order for you to pay 1,000 rupees for from 55 onwards, if you want to pay lump sum, pay now say 1 million rupees. Then we will guarantee 55 years from now onwards, bank will give you 1,000 rupees to you till you die. Then they say, I don't have a 1 million. So then they work it out. Okay, how much you can pay up to 55? If you can pay up to 55, they work it out accordingly, right? You have to pay, say, every month you have to pay 50,000 something, 50,000 or 20,000, and then you build up the required capital. And based on that, the bank will work it out how much I can give you, the bank can give you till you die. These type of products we call investment plans, and also you can tell them as a annuity products or pension plan or annuity product. It is better for these things to do it now itself. It is සමහර young පරපුර මේක කරන්න නැත්තේ මොකද ඊට පස්සේ අවුරුදු 30 40 50 10 15 කෙනා ගියාම ඔයාට අවුරුදු 20 50 හම්බෙන ගාන රුපියල් 500ක් කියවන්න nothing no after 30 years. That is why a lot of people, more older people are going for this type of products. But you have to pay a little higher. Why? Your benefits going to get immediately. That is what you call annuity products. Okay. Clear? Sadhanani. I need feedback, right?
Yes,
okay.
sir. Yes.
Right. Okay. So now with this concept, you may come up with a specific type of risk. Right. Now, we call longevity risk. Okay. What is a human life expectancy? What is the average life expectancy? Samani manusaki jivita kale ayu kale kiya. We are assuming how many years the average person live in Sri Lanka.
75.
75. That is the people life expectancy. Okay, clear? Are we right? Then hitanda manusek 75 මැරෙන්නේ නැතුව 75 මැරෙන්නේ නැතුව 75 85 90ට යනවා. Right? What is that risk faced by finance organization? දැන් අර වගේ product එකට annuity product එකට යනවා. When they calculating those figures and all, they are assuming that people may going to die at 75. Are හැබැයි ඇයි අපි ගුවන මැරෙනකන් සල්ලි දෙනවා කියන රුපියල් 10 ගානේ. දැන් හිතන්නකෝ අපි assume කරනවා අපි calculate කරනකොට අපි assume කරනවා 75 මැරෙයි කියලා. දැන් ඔන්න start කළේ මම 50 එන්නේ 55 ඉඳන් හම්බ වෙනවා. එතකොට මට අවුරුදු කීයක් හම්බ වෙනවද සාමාන්‍ය විදිහට calculate කළාම? මම 75 මැරුණොත් කියලා මම calculate කළා මට ඒගොල්ලෝ work out කරන්න කිය රුපියල් 10 ඒවා අවුරුදු 20ක්. අයි 55 ඉඳන් 75 මම මැරෙනවා කියලා හිතලා. හිතන්නකෝ කර්මයටවත් මම 85ක් විතර හිටියොත් මොකද වෙන්නේ? බැංකුවට මොකද වෙන්නේ? බැංකුව estimate කළේ අවුරුදු 20ට ගෙවන්න. Now they have to pay 30 years, more than that. So that is the risk faced by the financial institution if you go for such type of financial instrument. So that risk we call longevity risk, right? So therefore, please write in your handout small where what do you mean by longevity risk? Longevity risk means the risk due to living long beyond normal life expectancy is called longevity risk. Please write down. The risk, what do you mean by a longevity risk? The risk due to living long beyond normal life expectancy. Right? Okay, risk due to living long beyond normal life expectancy. Product like annuity, so we agreed to pay you till you die, you know, and bank will assume we are going to die at 75. But bank can smoothing off. සමහර අය 65 මැරෙනවානේ. සමහර අය 80 මැරෙනවා. එතකොට මේක කැපිලා යනවා. Ultimately it's come to 75. Right? So bank has to face some problem if the person who enter into a product like annuity or pension products we call annuity scheme, whatever, banks face a risk. That risk we call what risk? longevity risk. Harida? Longevity. So what is meant by the longevity risk? Longevity risk means risk due to living long beyond normal life expectancy. Clear? Right? That's the answer. Right? Risk due to living long beyond normal life expectancy. කෙනෙක්ගේ ජීවිත කාලයට වඩා life normal life expectancy එකට වඩා වැඩි කාලයක් ජීවත් වීම නිසා බැංකුවට සිදුවන පාඩුවට අපි කියනවා longevity risk. Right? Okay. Now, can you answer to this question? 2018 March FCM question. What's the answer? Simple. Our exam. What is meant by longevity risk? What's be the answer?
A.
Simple. A. Risk due to living long beyond normal life expectancy. Right? Okay. Longevity risk rising issuing of what type of products? If I ask you. Specific? Annuity?
Pension
products.
scheme.
Pension products or annuity products.
Annuity
Who's going to
products.
face this risk? Financial
Institution.
Okay, clear now, understood, no? Right? So this is the, sometimes the examiner may ask what you mean by a longevity risk. Now in 2018 they ask in form of MCQ, right? Okay, you learned the MCQ, right? Okay, right. Now some questions, right? Okay, true. Can you tell me what's the correct answer for this? What is the correct statement with regard to risk preferences? Increasing marginal utility of income represented by a convex curve is the key to risk loving. Decreasing marginal utility of income represented by a concave give rise to risk aversion. Constant marginal utility income represented by the straight line give rise to risk neutrality. All above are correct. What's the correct answer? Now you have to remember risk lover curve. You need to remember risk averse curve. You need to remember risk neutral curve. Matakada? We discussed convex curve, avatala, uttala, right? Matakada make it advanced question. For that you need to remember what is risk loving curve. Is a convex or concave? What is a risk aversion curve? Which is a concave or convex? If all are correct, what be the correct answer? Huh?
Convex curve?
No. What is the correct answer? Now you have to remember risk loving curve එක මොකක්ද? අපි ඇන්දානේ. මතකද ඇන්ද curve එක මොකක්ද? ඇන්දලා note එක තියෙනවද ළඟ?
Second?
Concave. එතකොට C බලන්න C. C also correct, no? මතකද straight line? නේද? එහෙමනම් all above correct, no? What is the correct answer? Right, okay, with the time now. Right, now risk loving curve is concave. Risk loving curve is concave, not convex. So therefore it's wrong. Because of that wrong, B also wrong. Right? So because A wrong, therefore B wrong, therefore D wrong. This is where you have to එකක් අල්ලගත්තන හරි. Right? එතකොට answer ගන්න. මතක තියාගන්න convex curve එක තියෙන්නේ risk aversion. Concave curve එක තියෙන්නේ risk lover. Utility straight line එක තමයි risk neutral තියෙන්නේ. මතකනේ මේම එකයි අනිත් පැත්තට යන්නේ. ඒක concave කියන්නේ උත්තල. අවතල convex. Convex හැමතිස්සෙම තියෙන්නේ කාටද? risk aversion. Concave තමයි තියෙන්නේ risk lover. Neutral එකට straight line. Then what may be the correct answer here then? Answer is C. Right? That is why I purposely underlined the word convex and concave curve. Right? And yeah, body hint check කරන්න. Right? Okay. Okay, make it a balance. So we'll answer for this. Now we learned at the beginning of this tutor. Okay, can you answer to this? Now again, I told you you need to look at the product as well as the customer's characteristics. Now who is this type of customer? Risk averse. Now what's the correct answer?
D.
Huh? I can't hear. Why did you
D.
huh? Answer is
D.
Hari. D, yeah? D the give B, not B, Buddha. Now,
Investment.
now, okay, now I'll take. Now, B now moves deposit across banks by analyzing interest rate changes. Then, we may have neutral carrier. Even at the risk level. Adit banku hoya gila. Yanni, we had a very went up pulo, how do we up pulo? Even හොඳම දේ මොකක්ද risk averse කියන්නේ risk ගන්න නැති product නේ. ඒ කියන්නේ guaranteed product එකකට තමයි මම යන්නේ. What is a guaranteed product? Treasury bond repos. අර treasury bill repo වගේ treasury bond repos. දැන් උතන ප්‍රශ්නය ආවකොට repo කැල්ල නේද? Repo mean trade secondary market product එක. ඒ කියන්නේ ඒක විකුණන්න පුළුවන් කියන එකයි. So what is the risk averse customer? So therefore invest money in a treasury bond repos. Risk averse mean he don't want to take the risk. If they are not going to take the risk, he's going for gilt-edged security. What is a gilt-edged security here? Right. Now think about this. Right? Okay, now think about this. I will ask the same question. Suppose a risk lover. What is the answer maybe? Risk lover customer, what may be the answer? A, B, C or D?
C.
C, right. He's going for floating interest rate. Laba velave laba, adu velavata adu. So he's going to take the risk. It's very risky going for floating rate. Then they run either. You got the points, no? Right. Okay. So let's look at the last one. This is March 2018 question. Same thing, no? What's the answer? Risk averse customer invest money in
Treasury bond.
treasury bond. Right. Simple as that, right? If you got the correct answer, right? So we'll stop right 3-5 now. So we stop now and try to answer that life insurance cover, and we'll continue next week. The borrowers, right? Type of borrowers. Very interesting again. So. We try to cover next week type of borrower. I hope you understood, right? Okay, today's lesson clear? Right. Okay, we will see you on next Sunday at the same time. We try to, but please read the note. Read the note and try to answer the questions as well. Thank you.